You might be able to save $12,060,000 in tax. I'm Bob DePasquale from Initiate Impact Virtual Family Offices, and today we have an introduction to trusts and estate taxes. If you've ever done some research into trust, you know that it can be quite confusing. There's so many different kinds, and there's quite a few acronyms. While this is certainly not legal advice, we're going to touch on a couple types of trust that might be beneficial to you. Before we get into the types of trust, let's talk a little bit about the difference between revocable and irrevocable trust. An irrevocable trust is the kind that cannot be terminated, amended, or modified, whereas a revocable trust can be. And for gift and estate tax purposes, a revocable trust is not considered generally a completed gift, whereas one that is irrevocable generally is. Understanding that is pretty important when doing estate and gift planning. I have a few questions you should ask yourself before getting into some deep trust planning. The first is this: what type of assets are going to be put into the trust? The second is, are these assets going to be used during your lifetime? Number three, are you maximizing other things to help minimize your estate? The next question is not always exciting, but what's your expected longevity? Honestly, when do you think you're going to die? Another is, what are your expectations for growth of these assets? And then finally, who do you want to receive the assets eventually? In other words, where do you want the gift to go? All right, let's get into some types of trust. The first few are all about providing a benefit to the settlor and ultimately a gift. You may have heard of GRATs and GRUTs. GRAT stands for Grantor Retained Annuity Trust, and GRUT stands for Grantor Retained Unitrust. They're very similar. Assets are put into these trusts and then provide an income to the settlor. If the settlor passes before the end of the terms of the trust, the assets are pushed back into the estate, and there is no benefit from the trust for the beneficiaries. If the settlor lives beyond the terms of the trust, things happen exactly how they're planned, the income is now done, and then the assets pass to the beneficiaries. A GRAT is often used when the owner of some shares of stock from a company that went through an initial public offering needs income later in life. The stock is passed into the trust and then provides income at what's called the applicable federal rate, which is set by the Internal Revenue Service. A GRUT is a little bit different. Here, the settlor is paid a fixed percentage at least annually from the trust. As a quick review, this is a great strategy for a settlor that wants income but would like to pass the assets to beneficiaries. When these assets are put into the trust, they're essentially freezing the estate, or at least from the growth of those assets, which is a benefit if you're trying to save on your estate taxes. The next type of trust has a little bit more challenging acronym. It's the QPRT, the Qualified Personal Residence Trust. This is a great trust if the settlor has a home that they want to eventually pass to beneficiaries but would like to still live in it. The home is placed inside the trust and they can still live there. If they outlive the terms of the trust, this is ideal because then the residence passes to their beneficiaries as planned, and they can still live in the home. They just have to pay a reasonable rate of rent to their beneficiaries. If they pass prior to the terms of the trust ending, unfortunately, the home will now pass back into their estate. The last trust of this type that we'll talk about today is called the CRT, the Charitable Remainder Trust. In this scenario, the assets still go into the trust and provide income to the settlor, but when the trust is complete, the assets then pass to a charitable organization. A key note about this type of trust is that it must be irrevocable. So you don't want to enter into this agreement if it's not something you definitely want to do. The next few trusts that we'll talk about are not income producing trusts. It's strictly about passing the assets. The first is a QTIP, or Qualified Terminal Interest Property Trust. This is generally used in a situation where there's multiple marriages, and a grantor wants to provide income to one of their spouses, but they want the assets to eventually transfer to other kids. It avoids estate taxes at the death of the settlor and throughout the life of the income beneficiary. The surviving spouse will receive income for his or her life, and then at their passing, the other beneficiaries will receive the assets from the trust. Some people would like to give a gift to their grandchildren, and in certain cases, the GST, or Generation Skipping Trust, is the one to use. A word of caution though, skipping a generation could avoid estate taxes for a whole generation, but there are many rules and you need to be very careful how you set these up. The final type of trust that we'll talk about today is the CLT, or Charitable Lead Trust. It's a bit different. Assets are still put into the trust, but instead of paying income to the settlor, income goes to the charitable organization or organizations of their choice. And then upon their passing, those assets go to their designated beneficiaries. That's a short list of some of the vehicles you have available to you when you talk about estate and gift planning. Now, I mentioned at the top of the video that you might be able to save yourself $12,060,000 in taxes. Well, that's the estate tax exemption in 2022. In 2023, it's actually going up to $12,920,000. And then if you're a married couple, you combine those numbers, that's $25,840,000 in estate tax exemptions. Needless to say, you probably want to do your planning properly and make sure you have the right people to give you the proper advice to do your best with what you have. And speaking of doing your best with what you have, at Initiate Impact Virtual Family Offices, we believe in generosity and the giving spirit. And it's not all about your finances, but if we're saving those kind of dollars, then we can probably be pretty generous with what we have. Wishing you a great rest of your day and a generous life.